The Treasury Secretary today, Martin Parkinson, backing the government's move to raise the debt ceiling to $500 billion, saying that it seems prudent. He's been speaking before a Senate Estimates Committee in Canberra, saying a raise on that limit is needed as Australia's government debt is set to be significantly higher, with economic growth slowing and tax revenues falling.
Together, these developments, a headline cash deficit already in prospect in 2016-17, a weaker economic outlook than expected at PIFO, and the RBA decision suggest a peak in Commonwealth Government securities on issues significantly in excess of the $370 billion projected in the PIFO, by extension making the desirable debt limit significantly above $430 billion. As such, the choice of a $500 billion limit seems prudent if we to place a premium on ensuring financial market confidence.
Well, have fallen tax revenues the result of what Mr Parkinson sees as sluggish economic activity?
Since PIFO, the outlook for investment in the resources sector continues to be for a sharp downturn. In the non-resource sector, activity is strengthening, only slowly, while labour force outcomes continue to be weak and the wage price index is growing at the slowest rate since the March quarter of 2000. This all suggests an outlook for weaker nominal GDP growth and lower revenues. Lower levels of nominal GDP today imply lower tax collections in dollar terms across the forward estimates, even if our nominal GDP growth rates are unchanged beyond the current year. As it turns out, our early thinking is that future nominal GDP growth is also likely to be weaker than at PIFO, suggesting still larger deficits and hence significantly higher peak debt than the $370 billion figure in the public domain.